Yo, Scopers, we're back. We're back. It's 2026, and the people then want to learn execution. But before we get into execution, I want to let you know that execution is the last point, right? You need to go through all of these things here to be able to get execution, ideally 80% of the time. Because if you just go for this, what I'm about to teach you, if you just go and just do that, it might not work for you if you don't understand direction, market structure, liquidity, point of interest, and execution. But what I'm going to do is I'm going to combine everything, because everything's simple but it's not easy. I'm going to combine everything into one thing using the cycles that I teach. So let's get into it. So let's start. As you know, the market moves in two ways, right? It's either there's two cycles that governs the market. It's either a buy cycle, which means this, all right, main push, mitigation, expansion, right? And then same thing, main push, mitigation, expansion. That's how the market moves, and that's how it tends to trend. And trend lines form basically using these things here. But what I want you to understand is we need to qualify what is a main push and what is not a main push. Do you get where I'm coming from? A main push is when, so I need to do another one here so you can see it. So let's say we have something like this, all right, and it's come down to here. This becomes supply. So main push is when we've taken liquidity. Let me just do something like this. A main push is when we've taken liquidity, right? Let me just change this quickly so I don't confuse you lot. Alright, cool. So main push is when we've taken liquidity, right? Let me just use this. We've taken liquidity and we've broken structure, right? We've broken a point where sellers. So in a buy cycle, a bullish buy cycle. A bullish main push would be when liquidity has been taken and we've gone and broken past the supply zone. That becomes the main push, right? And then we come back down to test the demand zones that actually led to the break, and then do the expansion. So main push, mitigation, expansion. Same thing with here, main push, mitigation, expansion, right? I want you to understand this, because understanding this will help you to be able to understand what I'm about to teach you next, which is the point of interest. So this is basically like everything in one, but I'm not going to go into details too tough. So cool. As I said, main push, mitigation, expansion. Then we have this variation, main push. Then we have a mitigation, expansion, right? These two are the same thing. Well, they're not the same thing, but it's similar. This would have been a breaker structure. Let's just put this breaker structure, and let's say it's taking liquidity here, right? Both of them taking liquidity here. This has broken structure here. Liquidity has been taken here, breaker structure. Now, point of interest, the only ones you're going to need for today. Extreme is the origination point of what started the main push, where the liquidity was taken, and then we had the expansion. We had the main push, the expansion, main push, same thing. It's just I'm talking about price going up. And then we have another one, which will be the decisional. The decisional is when, decisional is when we come to the supply zone, right? We come to the supply zone, but we get a reaction from it, and that reaction fails, and then we break the supply zone. So that becomes the decisional. The real momentum started from here. You go and come from that would be the extreme. So I want you to understand these two things. Cool. After understanding this, execution comes. Well, the way I trade, my execution is only on the mitigation. So let me show you different variations of mitigations, because if you don't understand mitigation, you're not trading is going to be a bit hard for you still. Mitigation, as I said, main push has been established and we need to come and test those zones, right? So this extreme broke it. It was a one leg break, so we come all the way to the extreme. Remember that. When it's a two leg break, meaning there's a decisional, leg number one, leg number two, leading to a breaker structure. Ideally, leg number two is what actually caused. Leg number two is a causation. That's what actually broke past the supply zone, right? So if it broke past the supply zone, we're likely to come here and mitigate. and then do the expansion. Okay, cool. Now, what obviously I've shown you mitigations, but there's variations of mitigations. There's strong ones and there's weak ones. So let's go through the strong and weak ones. Okay, cool. So a weak one would be essentially something like this. So we have the liquidity, then we have the inducement, main push has been established, we can't mitigate, and then we do another main push, right? Because obviously we've broken past this portion here, but this would have been cycle done. However, price comes back down again, and then we come and mitigate this previous mitigation point, and then do another high. This is weak, right? It's weak because, as I speak about, if you watch my videos, main push, retracement, mitigation, expansion, right? Let me just change the color so you don't get confused. So this will be green, this will be yellow, retracement, and then this will be obviously blue, mitigation, and then the expansion. Sometimes after this, price can just literally just come back down and do all of this, because why? The cycle is done. Sometimes what it does is just comes back down, take out the correlational leg, respecting the causational leg, the causational zone, you could say, and then go and do this. So this one is weak because all of these things could happen. Okay, cool. The next variation is this, when we have liquidity, main push, right? This is one of the best ones, right? Then we have the mitigation and expansion. This is the one, if you see it and it aligns with what aligns with directional bias and just say it aligns with, I don't want to get too deep into that, but it aligns with directional bias. This is good to take, right? Especially if it's in the extreme. Okay, cool. Then the next one would be an inducement into a mitigation. So we have something like this, inducement gone up, then before we come and mitigate, we also do something like this, and then we induce into the mitigation, and then we explode. What you gonna come from? This is the best one. Like this one here, 10 out of 10, I've seen it, it works. This one here, I would say 80% of the chance, sometimes it will go and actually break the side. Sometimes it doesn't, it just meets the efficiency of the pullback. And sometimes we just either consolidate like this and then come break it, or sometimes we consolidate and actually break it. Cool. So now you know this. We've gone through two things. So we've gone through cycle. You need to understand the cycle, main push, mitigation, expansion, and then now I'm showing you different variations of a mitigation, right? So as I said, this one's a weak one, this one strong one, and this one is the strongest one. This one, if you see it, take it 10 out of 10 times, right? And this concept, if you're asking me where I learned it from, you want to go and learn it as well, I learned it from Waka, and I learned it from ICT as well. Cycle, I got it from ICT. These types of mitigations is through experience plus Waka shedding light on it that made me actually see it properly. Okay, cool. But now, this still is not execution. This is just the foundations of the execution. The actual execution comes when we come to the mitigation zone. When we come to the mitigation zone and we're about to mitigate, you want to see a lower time frame confirmation, which is a lower time frame. So M5 and below, you want to see a miniature cycle, which is when we come here, you want to see something like this. We have something like this, and we take out that low, and then we have a main push, and then you want to get in on the mitigation of that miniature cycle to do the expansion, and it'll look like this. On a higher time frame, it might just look like this leg, but on the lower time frame, you'll see it as this miniature cycle here, which is, as I spoke about, main push, retracement, mitigation, expansion, right? And that's what you want to trade, and this is what you need. This is the universal one. There's many different lower time frame confirmations, but this is the easiest one to understand, and this is the easiest one that'll turn you profitable. This is what turned me profitable, right? So this one here, same thing. Mitigation, you want to look for something like this. Let me just change this to red so you understand it. This is what you want to look for, right? Same thing for this one here. After we do this, is the same thing, right? And this one, you're kind of seeing it, but this one here, what tends to happen is we do something like this, and then we come back down to mitigate like this and then go higher, right? So the lower time frame confirmation is actually built into the inducement into the mitigation. That's why I say this one's the best, because it's the clearest one to see, right? And this one you might get the lower time frame confirmation on, let's say, N15, for example, right? If you're looking at this on a 4 hour, for example. Okay, cool. Now we understand this. It still doesn't make up. It still doesn't make it. It still doesn't make up for the execution. Well, it's not the full blueprint of the execution. Now we pair it with lower key windows, basically. So key windows be in London, 9 a.m. well 3 a.m. to 10 a.m. well 3 a.m. to 4 a.m. and in New York 9 a.m. to 10 a.m. Those are the only key windows I use to trade these things here, right? And you want the key window to be in this portion here where the lower time frame confirmation is going to be formed. So now going through this, let me show you examples of how you can actually find this on your charts. And I'll show you this week. I didn't trade live, I was just forward testing because I wanted the first week of the year to print. So I was just kind of just seeing what is really going on. So this is on German 40. Let me just put my indicator on so we can see the session times as well. Alright, cool. So let's go through it. Monday. Let's see what happened and let me go through it. So remember, cycles, the main push, there's two things I use to verify a main push. Liquidity has been taken and we've broken past a point where sellers had control. If it's bullish, if I'm looking for a bullish idea, if I'm looking for a sell idea, liquidity taken and broken past a point where buyers had control. All right, so cool, let's get into it. So Monday, what happened? We have this portion here being supply. Why is it supply? Because obviously when this took out all of this liquidity, right, and then it came and broke this low here, right, as you can see. So that made it a bearish cycle, right? But then that bearish cycle got obviously broken. But it got broken where? During London key window, 3 a.m. as you can see at the bottom. Let's go on the lower time frame to see how we could have traded this, right? Cool. So we're currently on the M5. M5, you can't really see it. You won't really see it like that. Well, if you got the eye, you can see that, okay, it's broken past. Sorry, not this supply, this extreme. Let me just remove this. This is more on a high time frame that I knew that was going to go to. This is the target. But anyway, let's go on the M1. M1, what do we see? Remember, this is the point. This is a supply. Why? Because it came and broke this low here. Why that low there? Because that low took out liquidity and went and broke past these ones here. So if that's broken, sellers are in control, right? Okay, cool. Sellers were in control. We mitigated that point there. We had a little reaction, but that reaction didn't lead to a break of structure. Why? Because this point is what led to us going there. We didn't break this point here, so it failed. The reaction failed, right? Okay, cool. Then we came up. Obviously, it's broken internal structure, like here, like all of these ones here, but it didn't break the overall one. So it still has a break structure on the lower time frame, whatever you want to call it. What happens? We go up, mitigate, still fail to do the expansion, right? So what's that telling you? Buyers are holding price. Okay, cool. London opens now. What do? We go and break past the supply zone. The big supply zone I was talking about that actually led to this low being broken, as I keep speaking about, this low being broken right here, right? So that means that buyers are now in control. If buyers are in control now and is in our key window, obviously, logically, from what I taught you, you would have thought it as, okay, cool, main push. So we need to come all the way back down, right, to this portion here, as you see now marked out as a mitigation, or at this portion here as, obviously, this is the extreme, but the decisional would be here, because this is the point where we actually went and broke the supply. So we have the extreme here and the decisional here, but the decisional is in the premium. But we're not going to get into all of that now. But I'm just going to show you that using key windows will save you. Because back in the day, I used to see this and I'll say, okay, I'll wait for price to come, because the decisional is too much, is in a premium. Like, we've broken it, but if I was to put my fib on it, for example, from this low to where it was broken, right? Let's say I didn't see this price action here. 1 second, let me just move it back. Let's say I didn't see this price action here. Oh, if I didn't see this price action here, right, I would have said this is in premium, so I'm not going to use this decisional, right? But because it's in our key window, it's valid for us to take it. This is why I emphasize key window. You don't want to trade this without the key window. It only works best when you have the key window, because if not, you're either going to miss trades or you're going to get on the wrong side of the trade or wrong side of the move, right? So cool. Now let me show you something. 1 sec. I think I got a delivery. 1 sec. Alright, cool. So I'm back. So look. So what happens now? So where was I? Oh yeah. So we've broken the supply. Cool. With the key window, look at this now. Let me just remove this so you can see everything. Oh, you can see everything clearly. Alright, cool. So now let's read it. Where is our main? What would be the main push? The main push is liquidity has been taken and we've broken past the supply zone. So this is a demand zone that we should be looking at, right? Which would be the extreme, right? Because this is the point that actually led to that being broken. So cool. What happened? We broke that. What did I say? First thing we need to establish a main push is liquidity has been taken and is broken past the supply zone. If it's broken past the supply zone, that means that is a bullish main push. Bang on the key window, literally 10 past 3. We get the mitigation, right? And then we go and you can target a 1 to 3. Let me just do this. 1 to 3. Easy. This model works best with a 1 to 3. 1 to 10s on all that stuff. That's when directional bias comes in and all those things there. But look, straight 1 to 3 done in our key window. Sweet. 1 to 3 is done. Cool. Next one. So this mitigation would be the normal one. Well, the good one I was talking about. The one. Let me go and find it. It would be. Oh, let me go on at M5. So that mitigation would be this mitigation here. Why? Because we have a fresh one. Sweep. Well, liquidity has been taken and we've broken past the supply. So this portion here is very important. When we come there, mitigate, and you see the expansion. That's what happened here. On this one here. 1 sec. Ooh. That is what happened here. It's exactly the same thing. Liquidity has been taken, supply zone has been broken. We come back down, mitigate, boom, done. Okay, cool. Let's go on the next one. 1 sec. As you can see, this trade run for time. 1 sec. Let me just leave. And let's go to Tuesday now. I don't think Tuesday we're going to a trade. Nah, we didn't. It was Monday and then Wednesday. Perfect. So now let's go on Wednesday. What mitigation did we have here? Wednesday. Cool. Let's go here. Perfect. Same thing. Let's go and read it. What happened? Let's read Asia session, because Asia session is where we had the supply zone, right? So the supply zone would have been, remember, liquidity taken, right? Came down, breaking this portion here that actually led to this high being broken. Okay, cool. So we have a bearish trend, right? We come, mitigate. See how we mitigate the extreme, and then what do? Expansion. Cycle's done. Cycle's done. What happens next? We go and break the supply zone. What does that mean? We have a main push, right? Liquidity taken, main push. Okay, cool. But then now you're thinking, oh, like this will be the demand zone I'm looking for price to come to. This is why key windows are important. Once again, let's go on a lower time frame. Oh. This is why key windows are important. So let's play price now. 1 sec. Perfect. What do we have here? We have, so remember, so we've done the main push and we need to come do the retracement, and we're looking, ideally you'd be looking for this demand zone to get filled. However, key window happens. Remember, this portion here, Asia high has been taken. So what are people thinking? Oh, Asia high is a liquidity pool, it's been taken. We have a breaker structure, right, just before London key window. So when London opens, ideally I'm looking to sell around these regions here. What does London do? It takes that out. It takes this high out, right? Meaning we have a new established main push. New established main push, and what that main push would be, what would it be? Liquidity has been taken, right? Liquidity has been taken. All of this liquidity has been taken in this low. Then we go and break the supply zone that is meant to be respected. It's broken. If it's broken, what do we have here? Same thing. Liquidity has been taken. Supply zone has been broken. What mitigation zone is it? What mitigation one is that? The one I told you about liquidity being broken. Let me just go and find it quickly, because I want to build this repetition into your head so you know. Oh sugar. Alright, cool. It's this one here, right? Liquidity has been taken, supply zone has been broken. This portion here is valid for us to take as long as it's in the key window, right? Cool. So what happens here? Where's the supply zone? Is this one here. This is the supply zone. Extreme. Extreme has been broken. Where did it get broken? Right here, right? Okay, cool. Then we know that, okay, we've started a retracement. This being broken means we've started a retracement. But it's not in our key window yet. Key window comes, we break this high. It's meant to be respected, but we break it, right? So we have a breaker structure. Liquidity taken, breaker structure. The demand zone that led to that is this portion here. So guess what? We can trade that one. And look, 1 to 3. 1 to 3. Let's see. Hit. 1 to 3 hit, right? This is what I'm talking about. After the 1 to 3, there's another. I'm going to show you another one that happens as well, but it's not in the key window. This is the inducement into a mitigation, right? So think of it this way. When we done this mitigation here, right, it's just this portion here was not filled, right? This fair value gap here. This fair value gap is important. It's called an IFC, or some people call it an order block. I don't know, institutional funded candle. Bare people call it different names, which is basically when we do the inducement, you know that the big players have stepped in. Why? Because they're leaving efficiencies and going one direction, right? So obviously we've mitigated this portion here, and we've had the 1 to 3. However, we can still come further down, as I said, take out the mitigation point. So this is like, this would be ideally a main push trade, right? And then this is actually the mitigation, so you could have got in again during the key window again, 1 to 3, as you can see. But then what happens, we come and take that low out. One sec, we come and take that low out, and this is what I call inducement into a mitigation. Because now look, this is as I said, a causational point, but the 50% hasn't been tapped yet. It doesn't always have to tap the 50%. It's just when price is struggling, we can know that, okay, cool, after the 50% has been traded into, if we don't get a change of state of delivery, it's likely gonna go down. So what happens now? Look, we take out that liquidity. This one, I want you to look at something very carefully, right? This low here is an important low. What broke it? What broke it? It was this candle here, right? This candle here, if we're to read the candle, what did the candle do? From here, we broke it, and then it traded up. So that's a lower time frame confirmation already, but it's just obviously is within a candle, because this is why people trade this candle here. Say on the 15-minute, look for this candle that takes out both highs, the high and the low, and you want to trade it to the direction that you're looking at. It's basically the same thing. But look, lower time frame confirmation established. This low is not going to get taken out. Look, we come back down again, we meet the efficiency of the pullback, meaning the extreme of the move that actually led to this low being broken. We hit it, we came back down, failed to break structure. Okay, cool. Still don't get in yet. Lower time frame confirmation right there. Why? Because we've mitigated, failed to make the low, and we've broken past the mitigation point. People might see it as liquidity is being taken, but this is if you read the narrative wrong, right? Because there's liquidity everywhere. You just need to match it with where you want price to go. So now at this point here, where do you think the entry is? The entry is simple. This would be what? The extreme. This would be the decisional, right? That led to this portion here being broken. Ideally, this portion here, we're looking for it to be broken, but it's this here that's being broken, because this tapped it, came down, went up again, came down, broke this low. So that's an internal range low that's been broken. So when that internal range high has been broken, we have a change of state delivery. Where do you want to get in? Around this portion here, right? Ideally, this portion here being the decisional. So again, same thing. I think this one here, because of the size, well, the stop loss size, you might want to cover the whole point. So it's from this zone here, and you want to kind of target 1 to 3. Not kind of want to target 1 to 3, 1 to 3, literally. And you see how 1 to 3 doesn't violate this high. This is what I mean. Just stick to the 1 to 3. Don't go for anything more. Just stick to 1 to 3 and you'll be profitable. Literally. Then what happens? Price comes back down. Mitigate it, right? So ideally it's here. But this is outside the key window, right? But it's still, I got something called a forbidden session. I don't really, I used to trade it, but this happens like what? I'll say 4 times out of 10 in this forbidden session. So I checked my data and I said, you know, the forbidden session is, that's why I call it that's why I call it the forbidden session for a reason. Because it's not always like, it's not always gonna give you, how do I saying it? It's not always going to be the best session to trade. It's forbidden because sometimes like consolidations happen there and all of that stuff, so you don't want to be on there. So this one here is obviously outside the key window, but obviously it's in the key window of my forbidden session, and that's where we're getting an inducement into a mitigation, right? And then as you see, price just rips and you get your 1 to 3, right? This goes on for higher. When you get the mitigation inside, well, an inducement into a mitigation, ideally price runs for a 1 to 10 or whatever it is, right? So this one is one of those ones there. As you can see, price is gonna run for time. I think it goes on for the next day. But anyway, that's another variation. Let me just come off this, leave. And I believe Thursday there was a trade as well. Was this the Thursday one? Yeah, this is the Thursday one. This is the cleanest one. This is again another mitigation into, no, inducement into a mitigation. This is the cleanest one, right? And this is same thing. I don't need to explain it too tough because you understand it now. Supply. Why is it supply? Because it's broken this portion here, right? We've gone and broken it, so main push has been established. Okay, cool. But you see how in London there's no trade, right? Because we're still in that, we're in the middle of nowhere, and then London breaks it, right? And then we don't get no mitigation, because this is where we'll be looking for, because that would be the decisional, right? This would be the decisional. But you see how when we come to the decisional, we keep consolidating. We're not moving, right? We're not moving. So this one here wouldn't be in a trade, plus it's outside a key window. So now New York session now, what happens? We come and tap it. We come tap the extreme. Extreme has been tapped. But what do? We induced the decisional. Let me just put this as decisional so you can all see it when you're watching this. Decisional. So decisional has been induced. So this is inducement into a mitigation, because the mitigation it failed to happen during at the decisional, right? So we come to the extreme, tap, change, lower time frame confirmation, boom, right? Main push, retracement, mitigation. This portion here, obviously here it looks like, oh, it's big, but if I go on the M5, you will see that, yeah. Tap this portion here. This is where your entry is meant to be, and it's bang on in the key window, right? And then this one is the sweetest one, because why the range is big, so you know that if the cycle goes like this, main push, mitigation, expansion, you're looking for this high to get taken at a minimum, or this portion here to be met, because it doesn't always break, as I said, unless it doesn't always break, because sometimes this main push could have met a supply zone or a point where price needs to, obviously, is done. Let's say he's met a higher time frame mitigation, so it could come and break it. So you just target this portion here. That's what I typically do. But you can literally target higher than that, which is obviously the 1 to 10. In this scenario, I think it hits it, but it hits it the next day. All right. And this is one of the cleanest one, and this happened on Thursday, right? This is one of the cleanest setups because we have everything aligned on a higher time frame, meaning M15 and all that stuff. These ones here is more like lower time frame executions, but with your key window, it makes sense for you to take them. This one here, and obviously the Monday one as well. So this one, cleanest one, and remember I said is this one here. This is what happened. This one here. Main push, liquidity has been taken, supply zone has been broken. We come and do the mitigation. And then we go. 1 sec, that'll be here. Yeah, that'll be here. And also as well, you want to view it as, okay, let me see it as this. This is actually a 1 leg break. Yes, you see all of these things, but we're on a lower time frame. If I was to go on the M15, you'll see that it was a 1 leg break. All right, 1 leg break. You see 1 leg break. We have this little move here, but that's why it fails, because it didn't take out no liquidity, significant liquidity. It's just a 1 leg move, right? So you come back down to the extreme, mitigate, and that's where we get the lower time frame confirmation. Then we trade that, right? And 1 sec. And then we trade that. So this is one of the cleanest ones for executions because it's got everything, right? We've got the cycle on our side, right? We've got the mitigation type on our side, which is the best type of mitigation. And then we have the key window, New York, and then we have the lower time frame confirmation. And yeah, literally no brainer. You catch this one. And then I think Friday, I don't believe Friday. No, it was GU. So let's go on GU. I believe GU, there was a trade that I saw. 1 sec. Same thing with this one here. Clean. All right. Main push. Mitigation. Expansion. All right. And this again, New York. Oh no, London. This is actually happening in London. But let me go through this one as well. This one's the same thing as well as I was talking about. One of the lower time frame confirmations. So think of it this way. I mean, not lower time confirmation, lower time frame execution. So this one's a bit different, but read it this way. So we know that this is the supply zone, right? And it was a 1 leg break, basically. So this is the supply zone. And what's happened? We've broken, we've gone and mitigated, broke the internal structure. So now it's bearish. We know that it's bearish. But then what happens? If it's bearish, it's meant to carry on going. This should not get disrespected, right? Because it's the decisional. Decisional got disrespected, mitigated, went up again. This is more of the, the mitigation I was talking about earlier, the shit one. Right, the shit one, the dead one. The 1 sec. Where the hell is that? Oh yeah, it's on the other one. This is the dead one, the one that's already been mitigated. Let me go on this quickly. Is this one here? 1 sec. This one here. That trade was this one here. So we have the mitigations, consecutive mitigations. So this one is weak. Well, if you have the lower time frame confirmation, it's valid. So let's go and check it out. 1 sec. Oh, where the hell is it? Damn. Yeah, there it is. By the way, I didn't hold it. I didn't hold it for this much. I just after. Well, it was a 1 to 3. This one was a 1 to 3. Just as you can see, the 1 to 3 doesn't break the supply zone. Well, the supply zone. But it was a 1 to 3 for. Yeah, it was here. So let's go. Let me just do this. Go on a lower time frame. And what do we have here? So we have a main push. Why is it a main push? Because look, this is a supply zone. This is what actually left for this low to be broken. This low here to be broken, right? So it is a supply zone, right? So when London opened, is it London? Yeah, London. Oh no, New York even. Shit. New York, what did we do? we break this portion here, right? But we still haven't tapped into this portion here yet, because if we refine our, what's it called, supply zones, one sec. If we refine our supply zones, supply, let's put bearish extreme, yeah. We haven't reached it yet, have we? And if we're looking at this one, we still haven't reached it yet, have we? No, this portion here, we haven't reached it yet. Later on, in terms of point of interest, we'll go into how to refine point of interest and all that stuff there. But look, one sec, let's say this part is the bearish one. So New York, what do? We have the consecutive mitigations going on. So we've broken this one, mitigated, right? Went up again, broke this, came, swept some liquidity, inducement. Then what do? We go and break this. But now, where's the lower time frame? Because this one, normally I wouldn't take it, but this one had a lower time frame confirmation. So look, where's that lower time frame confirmation I'm talking about? We had the mitigation. What candle led to the mitigation? And why this candle specifically? What did that candle do? One sec. Where's my drawing thing? This candle here, what did it do? It swept this previous candle here. So inducement, brought it down, mitigated, right? And then we went and broke above that here. So where is the lower time frame confirmation? Very simple. Main push. All right. We need to come do the mitigation around here. Mitigation. And we're looking for the expansion. And look. Mitigation, right? Expansion. See what I mean? Expansion, 1 to 3 hit. Within how long? Let me check. So mitigation would have been here. 1 to 3. 22 minutes. And you get your 1 to 3. Do you get where I'm coming from? So yeah, man, that is, you just, and this one again, it is basically like the other one where I said inducement, main push, breaking the supply zone here, right? Mitigation, lower time frame confirmation, get in, expansion, done. Cycle's done. Main push, mitigation, expansion, right? And where did the cycle finish in? It finished at the extreme, but obviously knowing the directional bias, knowing that, okay, cool, we need to go higher because this portion here basically is we're within a higher time frame cycle. You know that price is likely to go higher, right? And that's what it does here. It goes higher. And this, I think it was 1 to 10 after I checked it. If you were to check the actual move, it was 1 to 10, but I don't advise that. 1 to 3 is good enough, right? Yeah, 1 to 3 is good enough. As you can see, it goes to 1 to 10. And next one was leave. One sec. Where the hell is it? One sec. Oh yeah, this one here. So this one with key window, it was all right for us to take. Which was the extreme. I think the extreme, I marked it because we'll get into the refinement of the POI as well later on. But this one here, same thing. The extreme has been tapped, not fully, but the tip of it has been tapped. It tapped into Asia, right? Asia, and then we had the lower time frame confirmation. So main push from here to here, main push, mitigation, right? During London session. Then when we had the mitigation, lower time frame confirmation. Let me just delete this so you don't confuse your lot. So mitigation, lower time frame confirmation, price just went straight and broke this portion here, right? But that is the lower time frame confirmation. So we've gone mitigation, lower time frame confirmation from here to here. Why is that a lower time frame confirmation? Because look, we have liquidity taken again. Sweet, as you can see here already. Mitigation, expansion. This is the mitigation, well, inducing into a mitigation, right? So the mitigation happens, and you might think, oh, this is the expansion, so the expansion is done, it's not coming down no more. But no, read it properly. Inducement, retracement, well, main push, right? Mitigation, but we induced to mitigate. So that means that if we induce to mitigate, this becomes a main push as well. So main push and then mitigation. Onset, mitigation, and again, this one went and done more than 10 hours. But again, 1 to 3. 1 to 3 would be here. You're gonna come from, and this is within our key window. Literally just Wakar says 15-minute buffer, so give it 15-minute buffer before and after. So after, obviously, the key window is 3 o'clock to 4 o'clock. 15-minute buffer meaning 4:15, and this happened at 4:10. Do you gonna come from? So 1 to 3 there, boom. Do you gonna come from? And then price comes back down again, and you see if your entry is precise, right? You see how look how it skims your break even, because ideally you're getting break even after here. And even this one here, let's say you're scared to get in, right? You still have a lower time from confirmation, but meaning that you have to get in here now. Because look, sweep again, sweep, push out. Why push out? Because this swept liquidity and broke this low. Where you gonna come from? This swept liquidity and broke this low. So that's your lower time frame confirmation when we break above here. Lower time frame confirmation, and you can get in here. Again, what do you get? 1 to 3. Very simple. Do you get where I'm coming from? But it's not easy, because you need to understand higher time frame bias. But in this scenario, higher time frame bias, we already know that sweep liquidity has been taken, main push. This is the extreme. We come and mitigate the extreme. Asia high is left, so is a liquidity pool that we can target. And obviously, we know that if we had the main push mitigation, we need to go and do the expansion, right? And we do the expansion. And yeah, man, that's pretty much it. Like, this is pretty much it. I don't want to make it long, because obviously it's the execution is literally just the last bit, and you're literally just going through these. You're going through these. One sec. Yeah, you're going through first, obviously, the cycle, because this cycle you want to find on a higher time frame, at least the 15-minute, because the M15, I call it the intraday cycle. M15 to an hour is the intraday cycle. So the intraday, you want to find this cycle here, pair it with a higher time frame bias, of course. And then on the lower time frame, you're looking for a mitigation, and a mitigation, when you do the mitigation, you're looking for a lower time frame confirmation when we do the mitigation. That's what you're doing. So it's a 3-step process. Find your intraday cycle, right? Where are you in the intraday cycle? Have you just done the main push? Okay, fine. Wait for the mitigation. When the mitigation happens, what are you looking for? Lower time frame confirmation, lower time frame confirmation, lower time frame confirmation. All of these mitigations have a lower time frame confirmation. If sometimes it will happen, you will get price, tap it, and then fly, which is fine. You will miss some, right? But majority of the time, you will get the lower time frame confirmation in your key window. That's what you want to focus on, in the key window. Just trade it. So you want to restrict yourself, because there's one thing that I say: impatient traders pay the patient traders. So if you can't wait for the lower time for confirmation, sometimes you're just gonna get sucked out, because you don't know if this cycle or this cycle, intraday cycle, for example, if the higher time frame is bearish and intraday you have a bullish cycle, it doesn't mean that it's going to fulfill and give you the higher high. No, because this has met a point of invalidation. Basically, this move up here could have mitigated a higher time frame cycle, right? A bearish cycle, and we could come and violate the whole thing and just do this. Where you gonna come from? And then come back and then carry on going down, meaning we started a new cycle. So you want to be careful and line it with the higher time frame. That's why I said execution is literally the last point. But again, restrict yourself and put the key windows in place for you to find the lower time frame confirmations and trade with it. And that's simply what happened this week. Next week I'm back trading Forex, GU and German 40, and I'm trading what's it called, futures as well. Same thing happens on futures, literally. You go on E-mini quickly, where is it? Same thing happens on futures as well, right? Futures the same thing, literally same exact thing. See this one? This is what I mean. Just because you get the lower time frame confirmation, because this one is a weak one. You see the weak one I was talking about, the weak mitigation, which is when we have, one sec, I'm gonna mark this. When is this? Wednesday. Let me just mark it so when we come back there I can show you properly. This one here. Okay, cool. Change this to thick. Okay, cool. Now let's go in German again and then show you the weak one I was talking about. You see this weak one here? This one here is weak, right? Meaning sometimes you might even get the lower time from confirmation, they'll still fail, and that's what happened on E-mini NQ. This one here, because if I look at it, what do we have? This portion here, right? We tapped it, got the lower time frame confirmation, and then what happened? It still failed. It gave a little reaction, but then it failed. Why? Because the mitigation that I was trading on is weak. So you're gonna come from. So just bear that in mind. And yeah, man, this is the execution, literally. One thing as well, I don't really do this, but if you're trading on prop firms, I'm partnered up with Equity Edge, Alpha Capital, Alpha Futures, and E8. So yeah, if you want to get a prop firm, I got a discount code for you lot that you lot can use. Is simply just CTS, literally CTS, and it will give you, I believe, up to 40% on all prop firms. And yeah, literally, that's pretty much it. So enjoy the rest of your day, and new week, well, next week, man said new week, next week we go again. Just remember, an impatient trader pays the patient trader.